Imagine a world in which your data is not fragmented and locked in certain intermediaries. Imagine that world we all dream of some trusted open finance flows. This is the world that FIDA, the regulatory framework of financial data access, is all about. And I like to think of PSD2 as a guy that really disrupted the market with open payments, if you want. And FIDA is probably a girl that is trying to make more connections, more network effects. So I like to think of this gender representative way of making fun of regulations and making fun of Europe and our market. And I have here an amazing guy to discuss and regulation in Europe. And I'd like to welcome Rik. Thank you for joining us today
Thank you for the invitation, Effie.
Is it sunny in Brussels?
Yeah, here it's sunny. No clouds at all.
So it is a unique moment that we're coming together. It is sunny here in Zurich. And for those that don't know Rik, I will try and pronounce your last name, Coeckelberg. Did I do?
Coeckelbergs.
Okay.
It's the proper Dutch pronunciation.
The proper Dutch pronunciation. You are the founder and managing director of the banking scene, which I understand is a phygital network, right? Of bankers.
Yeah, we network offline, so that's very much physical. The virtual sessions came to an end back in 2023, I think. But of course, we do share a lot of valuable content on our website. So in that respect, it is phygital. There's a big LinkedIn community and community at large behind the physical events, of course. But our main activities are offline in Belgium, Netherlands, and Luxembourg to think about the future of payments and banking.
Yeah. And that's where I saw you talking about FIDA. I guess this was a topic that was recent in your events. I have to also mention that you are a new author. Your new book, The New Ethos of Banking. Oh, wonderful.
There you go.
Physical books. Congratulations. That is a monumental task. It requires a lot of passion and the
discipline, especially discipline.
Discipline. And let's start by setting the scene. Really, PSD2 has been instrumental in payments, in opening our industry, and sometimes it was the market that drove these openings, and in many cases it was the regulation that imposed it. And FIDA is definitely an evolution. It's not yet implemented. Do you want to sort of address the gaps? Maybe tell us a little bit about the gaps that PSD2 has and how FIDA is coming in to complement.
So far we had two big events this year, one in Luxembourg and one in Amsterdam. And both times we discussed FIDA. First time was in Luxembourg back in January, and that was the week before the so-called fake news of Politico that FIDA would be off the table. That was then being contradicted by the European Commission a day later. But that did create quite a shift, and we can discuss that later. But first things first, let me go back to PSD2, which you said is fundamental or was fundamental to open the payments industry. And as much as that is true for setting the foundations, I'm not so sure it was as successful as the Commission hoped. So there are quite a few lessons to be learned from that directive. And yeah, it was pretty game-changing for the banking industry. And one of the things was that, well, they had to open up, but there were no specific incentives for the industry to do that in the best way possible. As a consequence, because there were no incentives to invest in it, it was seen as a pure compliance exercise, which led to quite a lot of fragmentation as well. Different banks would have different standards of their APIs or connect to different platforms, etc. And it remained pretty fragmented. The difference with FIDA is, first of all, scope is much larger. PSD2 focused on payment accounts. FIDA is going far beyond that, also including mortgages, pensions, insurance, savings. Democratizing financial data access, but that is also a risk that perhaps the scope is way too large in order to be successful. Another thing is that FIDA also introduces industry-governed schemes to define standards, interoperability frameworks, but also cost recovery mechanisms. So it allows monetization, which could foster a higher service quality. Key question will be, are those monetization structures enough to convince banks to go beyond looking at it from a pure compliance exercise? Another additional feature, and that could be very relevant to have a higher uptake from a customer point of view, is that there will also be a consent dashboard. So customers will not only have easier access to the data compared to PSD2, but it will also be much easier to manage the approvals that they did in the context of FIDA compared to PSD2. I think those are the main differences and the main arguments why potentially FIDA could be more successful than PSD2, according to what I read and what the expert shared on our stage, because of course I was the one asking the questions, not the one answering the questions at our events.
Yeah, I mean, I echo what you said, you know, the incentives of the quality of APIs and maintaining them it remains an issue in the industry. I'm not sure also because we have fintechs that have scaled up and are grown up, and maybe we don't call them startups anymore. Maybe they're not even fintechs anymore. They're financial services providers. How are they doing in terms of opening up their data and enabling others to access their data through APIs? Is there any discussion there? You know, are the Revoluts, the Klarnas, then 26s, the, you know, all the European fintechs, are they doing really well in terms of using or opening up according to PSD2? Is there any talk about that, or not really? Everybody's looking at the incumbents.
It wasn't really the conversation I was having, but it's not an incumbent versus a neo story. I mean, if you are a bank, you need to comply. And that means that also Revolut as a bank and 26 as a bank will need to comply. They need to provide those APIs as well. And they can use the APIs from others, obviously. So it's not that you can just cherry pick which regulation or which directive to comply with. It's a mandatory industry-wide initiative. Now, it's not live yet, and it still remains to be seen under which form it will go live. I actually expected to have seen more news on FIDA by now. Haven't seen it yet, but the trilogue is currently, I think, ongoing to get deeper into detail to see what needs to be changed compared to the draft, etc., making sure that it will be more of success. But I can imagine a lot of lobbying is currently going on to perhaps soften the entire regulation, because there's currently, as you saw in the Politico article, also a lot of resistance against it at the moment by some countries.
Yeah, it makes sense. It seems to me that the most difficult and core part of all this is the question of trust and identity management, and how you authenticate across these networks in order to have a trustworthy and secure open finance network, if you want. And there it is complex. How is FIDA going to help in building trust when we have so many other issues that are mushrooming, that are not creating trust in the banking network, right? Especially with the native digital providers, we would say easily that there are issues with trust. And now if we open up, how do we deal with that?
I think that we need to make a distinction between the whole authentication, identification, and FIDA. FIDA essentially will use those mechanisms to exchange data. The exchange of data is what FIDA is about. And in that respect, I think the spirit of FIDA could enhance trust because it gives more ownership back to the end user. They can now decide to extract data from one organization and provide it to another. It has better tools to manage the approvals that is given upfront, like the consent, etc. It will have that dashboard to see who have I shared data with, etc. So in that respect, I think FIDA will provide not only the possibility to do more with the data that you actually already have, but that's currently owned by your bank, but it will also give more transparency on how your data is being used. So that is, I think, essentially the two elements that could increase trust through FIDA. And likely we'll also see more innovations where hopefully banks will no longer be considered as the evil minds that capture all the money, capture all the data, but through FIDA, they will also understand what value it could bring to use data, but also distribute data. And maybe in that respect, in that spirit, consumers may see or may trust their institutions higher thanks to FIDA. Although, if we look back to PSD2, I'm not so sure to what extent that will have an impact. Now, when we talk about trust, identification, authentication, of course, one of the elements that will make FIDA successful or not is also the easy flow of exchanging data. And there, it will be important to cherry pick the right tools to provide that uniform user experience to exchange those data as well. And that's where I think the identity and authentication mechanisms will be super important and relevant, making sure that you can, as a customer, share those data with the tools you already know. So trust is definitely important. It's an anchor point of FIDA, but I think it will be more of a mindset change that perhaps a mindset change that FIDA will generate to build more trust more than the tool itself, I think.
Do you think that the European digital wallet concept, if it goes into production, will that help the cause? Will it be something that will strengthen the potential of FIDA's success in the market? From the discussions that you have had, if we imagine that the European digital identity wallet will be adopted, because there's always the last mile island, right?
The vision is definitely there. A government-backed interoperable pan-European identity framework that consumers control directly. It remains to be seen how that will be developed, how that will be rolled out. As a Belgian consumer, I'm spoiled. We have an online mobile identity wallet, which is It's Me, and that works perfectly fine. It's not governed, or it's not owned by governments. It's owned by the four banks and the four telcos, but it works very good in terms of user experience. I personally don't see the need for a European digital identity wallet. Although if you then look at the whole discussion of a sovereign Europe and make sure that you have a fallback in case privately owned identity frameworks go down or things like that, in terms of resilience and sovereignty, I do see the point for a European digital identity wallet. How will that relate to FIDA? That again is a matter of which tools to use to activate the FIDA mechanisms. And there it's a matter of building that clear user experience. And there, yeah, European digital identity, what could provide that overall continental wide uniform user experience. On the other hand, that may also clash with already existing habits that consumers have in some regions, like for example in Belgium with It's Me.
Yeah,
So you could give customers the same power in the digital world as what they have with physical credentials, but it remains to be seen how it's being developed and how that works in relation to already existing solutions in some countries.
it's also important to bring into this discussion the subtle but important mindset shift that is going on right now because of the imposition of tariffs and because of all the geopolitics. Suddenly discussions that were had behind the doors about Europe having its own card networks and more independence, now they're becoming more public, and because they're coming in the public awareness, they are also contributing in a mindset shift. And suddenly the European digital identity wallet might be valued more by Europeans, even though they might have regional solutions, right? So all these are changing as
Potentially, yes. Although you could also, like, I think the resilience agenda of Europe right now is a very relevant one. I just don't know to what extent that filters down to the consumers on the street that are not involved in those discussions. And that's, of course, that's completely different discussion where you talk about to what extent is there still a sufficient link between European politics and local communities.
very well taken point,
Yeah.
Rik. I mean, as you already mentioned, FIDA is a lady with huge ambitions, big, bold vision and of network effects, really. Do you think that a phased approach should be taken in the implementation or the imposition of this regulation?
Well, it's definitely what the experts thought on our stage. One reason being that some elements in financial services are better prepared than others. Like in payments, we've seen what the impact is of working with APIs because of PSD2. So you could imagine that retail banking will be better prepared than, for example, insurance, mortgages, etc. These are very important pillars in financial services, but we may not forget these are often also pillars that have very limited contact with their customers. It's a few times in the journey that customers have contact with them. As a consequence, these were not the key priorities in terms of digitization. And one of the experts told me that in some cases, the entire process may not even be digitized yet.
Yeah,
And
the
how are you
mortgage,
gonna exchange those data if everything's still on paper?
Yeah.
So in that respect, I think a phased approach definitely makes sense. And it will also bring down the regulatory pressure on financial services at large, which is currently, a challenge. And a lot of institutions struggle with it, not just the small ones.
If we look at mortgages and wealth,
Yeah.
investments, those are two great examples
Yeah.
where there's a huge, it's not a level playing field. You have some European countries that are more advanced in digitizing those and others that are at zero.
Exactly. Another challenge is also I'm currently writing a white paper on sustainability and data. And it was based on a couple of roundtables we organized, and one of the feedbacks was sustainability manager that said that they have to interact with 13 different supervisors right now in context of that data, simply because it links to so many other side regulations, going from perhaps MiFID to GDPR and everything else. And that is often overlooked in developing these new regulations as well. So there's much more than just that one FIDA that needs to be considered. It also needs to fit in that bigger puzzle that's often not being considered the moment they write those regulations, which is, I think, another very important attention point going forward, and perhaps also one of the reasons to apply a phased approach. So you can also learn from the lessons in the beginning of the process to make sure that you can get through that process much easier.
Yeah, yeah, because the process, the regulation per se is as good as it gets adopted, right?
Yeah,
If it doesn't, then it just stays on paper. And as you said, how does it interweave with GDPR and DORA?
exactly.
Also, these are major topics, and not to have this regulation again seen as a compliance exercise, but really as how it can transform business models
Yeah,
and for the benefit of consumers at the end, and the providers too. Can they create new products, new services?
exactly. And it also means, like you referred to GDPR, to DORA. It's not just like in the past. I remember with PSD2, I still worked in a bank as a product manager, and discussions were mainly legal and product management. And then we would give the instructions to IT on how to set the requirements, etc. Or we would give the requirements to IT to make sure that they can properly implement what's required. But today you have GDPR officers. With DORA, you have these DORA officers that have their own agenda. So suddenly, like building that API, building a constant platform is not enough. You need to ensure that you are GDPR compliant, consent driven, purpose limited, and reversible. And those are things that need to be added in the equation now. The Digital Operational Resilience Act also required that you do those benchmarks and audits on third-party providers, etc. Things have become much more complex.
Yeah, the web complexity and uncertainty is increasing, and we haven't even mentioned any of the opportunities and challenges coming up with the advancements in AI. How can we use
Yeah,
AI, with unstructured data around these more involved financial products like mortgages? Imagine a world where, okay, we have these APIs around the mortgage life cycle or product cycle, and then how do you harness generative AI around those products, and how do you stay compliant, and in the next step, how do you implement agentic AI processes that are compliant with these? And we haven't even scratched the surface. As you,
yeah,
if we have products and services like these that are not digitized, then we can't really start looking at leveraging and changing the business model.
absolutely. Yep.
It's not there. Rik, I want to close our FIDA conversation with on a positive note, and talk briefly about your book. Your new book is actually going to be the reading of our next Fintech book club. We read a Fintech book every quarter, and then discuss it with our insights. And your book is the next one, which we will be discussing in early July. Tell us a little bit about the main narrative and the main ideas that you have put out there, and why.
Yeah. Perhaps the why, because every once in a while I got the question, when are you finally going to write a book? And I didn't really see the reason, because I thought everything had been written before already. Until a few years back, we had a couple of conferences themed the new ethos in banking, where we gave the floor to people like the CEO of the European Banking Federation, CEO of FIDA Bank, CEO of Beobank, etc. And they all got their chance to share their definition, their interpretation of ethos in banking. And that brought me something new insights, and a very relevant story to tell to a broader audience, I think, as well. In summary, The new ethos in banking, embracing values and ethics for a meaningful transformation, is a book about banking, but it could be applied to any other industry as well. Essentially, the call to action is that people should look back at the identity, the DNA of their organization, the values that organizations stand for, and reflect much more on that in their day-to-day actions and decisions. Making sure that through that identity, through those values, they build a meaningful transformation instead of simply copycatting what others are doing well. So that's my call to action, and I hope that by doing so and aligning the actions with your words, banks can get that more trusted reputation again going forward. And so the book first looks at the history, what's been going well, what's been going wrong, etc., both from a very the far history until also what happened with digitalization and what was the impact of digitalization on the perception from customers, because that's essentially for me what Ethos is about. It's how others look at you instead of how, trust cannot be built. It's something that's being created by others for you. And that means that you need to have that contact with your audience as well, with people, with society at large. And that's essentially what it looks at. And I'm going to dig a bit deeper in the opportunity in digitization today, doing so, embracing those values and ethics for a meaningful transformation. It's not a book about ethics at all. It's more a book about apply what you stand for. So we talk about digital, then there's a bit also sustainability as well, and then a brief elements that we should consider in building that new ethos. And then I also recycled a chapter that I once wrote for Chris Skinner for his book on sustainability, which is my vision of banking in 2040. That is the year that my oldest will get 20. Back then, that's what Chris asked me to write about, and we're gonna use that again because it's very much linked to the topic of the book.
Fantastic. And I'm looking forward to reading this and thinking, rethinking customer centricity that we've been using, in the last 2 decades when we talk about the digitization of financial services and what it means, because it doesn't just mean, cheaper, faster, frictionless.
No, absolutely. And I think if
Transactions.
you do it well, you have an option, you have a possibility to even charge more, because if you have people that are aligned with your values, there's much more than just a signature. There is a connection between the organization and the customer, and they will be more loyal, meaning that you can probably make more money with them as well.
We could have a whole discussion, and we
Absolutely.
probably will on this topic, because what has happened to loyalty with the digital transformation, it's very interesting questions. And I love the fact that when reading books or having these discussions, there's more interesting questions that come up that we have to think and rethink, because everything is changing. Rik, thank you so much for joining me today.
Thank you for inviting me, Effie, and always happy to come back one day.